Well, the question that's on every investor's mind right now is, why does the stock market continue to keep going up? And it's probably the question on your mind if you've clicked this video. As at recording this video, the NASDAQ is currently sitting at 9.4K. It's made a massive recovery. A bit over a month ago, it was just under 7. And it's nearly back at its all-time highs there that we can see in February. Similar situation with the S&P 500 there, but not as extreme. Fell to around 2.3K from its February high of nearly 3.4. And now we've seen it trotting along and it's back at 3K. So why? Why does the stock market take one of its biggest tanks in history and then recover so fast? Why does the stock market continue to go up? And it's definitely a good question, and it's a question that I'm going to try and answer in this video here today. And I'm going to try and break it all down in this video here. It's going to be quite in-depth. It took me quite a lot of time to research and put this one together. So if you guys do appreciate the video or you learned something here today, all I ask is that you hit the like button. And if you do like the content, please consider subscribing, because I do make financial videos and stock market videos. I try to put one out at least once every 3 days. So please hit the sub button to watch more of my content whenever I put it out. Let's jump into the video. So to determine why the stock market has continued to go up and up, we have to have a look at the current situation right now and the current situation that has unfolded over the past few months. Currently we have a global pandemic. Everyone has to be staying at home right now. We've seen these restrictions start to ease as of late, but look at the unemployment rate here. These numbers are ridiculous and they are frightening, to be honest. Look at the spike. It's up at around 15% in the USA. Look at this chart here as well, going back to like 1945, pretty much the history of unemployment numbers. Look at this spike at the end of the chart right now. That's where we are right now. This is just insane. Look at the predicted numbers here for May as well. Expected to bump up to around 19% total unemployment in the USA alone. 19%. That's like nearly 1 out of every 5 people in the USA that do not have a job. That's just ridiculous. And yeah, we know as the economy starts to open back up, some of these guys will return to work. But let's just say 10% of these jobs return back to work. Because all of them aren't just going to go back magically. Let's just say 10% do. Then we've still got an unemployment rate of sitting around about 10%, which is still very historically high. If you have a look back at that chart there, you can see before all this happened, we've had very low unemployment rates. The economy wasn't doing too bad. Had an unemployment rate sitting around 3 to 4%. So 10% is still a very high number when we are talking unemployment rate. Because when these businesses do open back up, right, they're not going to open back up fully, or they're not just going to employ everyone back straight away. Business is going to be down. Because what happens when we have so many unemployed people, right? We have people that are now making less money, therefore they have less money to spend. When you have less money coming in yourself, right, you're obviously going to try and spend less. You're going to only spend on the essentials, and you're going to try and pay the bills first and foremost, right? But any kind of discretionary spending, any kind of extra spending, nah, you can throw that out the window. I guarantee people right now that are suffering due to this whole situation, they're not going out and buying new cars. They're not going out and buying new TVs. They're not going to go and dine out somewhere. One, because you can't right now, but even if they could, they just don't have the money to spend, or they're scared, that they were in that situation and they need to save their money more carefully here now. And in turn, all of this hurts businesses massively. One, because some of them have to be completely shut down, so they're not getting any money coming in the door right now. Second is the businesses that are open, with so many people unemployed that are spending less money, there's going to be less money that's going towards the businesses because people are buying less things. That's going to hurt businesses' profits massively as well. And if a business is loaded up on debt, they've got no money coming in, they have to try and pay the bills, but they can't with no money coming in, then we see these businesses going under, or businesses going bankrupt. So without looking at the stock market at all, if I just told you all that information that I told you there, without having a look at the stock market at all, you'd think, what? The stock market's got to be down at least 20%. 30%, 40%, 50%, right? Nah, no way. The stock market just continues to keep going up and up. Yeah, initially, obviously, like we can see on the graphs there, they had that big initial dip when all of this situation was starting to unfold. But we can see ever since late March, April, it's just continued to go up and up and up from there. Okay, well, I kind of have told a bit of a lie here. I've given you all the bad news that's happening with the stock market right now and what's happening with the economy. But I haven't also told you the good news, and this may be why the stock market does continue to go up and up. So we'll get into the good news here. And one of the main reasons that I think we haven't seen the NASDAQ be hit very hard at all, or it make its massive recovery, is if we have a look at the companies that are actually inside the NASDAQ and how much weight they have on moving the NASDAQ stock price. Sorry, moving the NASDAQ's index price. So if we actually have a look at the companies that make up the NASDAQ here, we can see that the top 6 that are really the top 5, because spot 5 and 6 there are different types of Google shares. Anyway, if we have a look at these guys, we can see that they all make up a very large portion, or a very large percentage of what the NASDAQ index is. We can see Apple here making up over 11% of the total NASDAQ index, Microsoft making up over 11%, have Facebook making up over 4.5%, and Google pretty much nearly making up over 8%, or a little bit less than 8%. Now if you add those all up, we have a total of around about 45%. So these 5 companies here make up over 45% of the total NASDAQ 100. So there's 100 total stocks in this index, and the top 5 make up over 45% of that. And what do all these guys have in common? They're tech stocks, right? A lot of their business, if not all of their business, is actually pretty much online. If everyone's stuck inside, they can't go to their normal brick and mortar store. They're more likely to shop online. They're more likely to use these online services from these companies. Not only that, but just as well, honestly, these 5 companies there, they are honestly amazing. Even during a recession, we're going to see them still continue to grow just because they are such great companies. They have such solid business models and high growth. They're just amazing, and we're not going to really see them drop too much. So yeah, they haven't really been too affected or affected as much by the whole global pandemic right now when you compare them to some more of your traditional companies. And we haven't really seen the stock prices for these guys hit as hard. You can see this here now. I'm just showing up some of them on the screen as I'm speaking. But yeah, when these guys make up over 45% of the index and they're still doing pretty well, they're not suffering, they're definitely going to have a lot of weight and a lot of influence on increasing the index price, right? And it's a similar situation with the S&P 500 index. Look at the top 5 or 6 in the S&P 500. It's the same deal. And we see some familiar faces here, Microsoft and Apple. But you also got in there, Johnson & Johnson, right? Which is considered a very safe and recession-proof company. They make things like soap and stuff, right? I'm not going to show their stock chart, but if you go and have a look at it, it's doing good. Visa there as well. Visa's also doing great right now. And if we add up the weight for these top 10 companies here, we can see that they make up over 25% of the S&P 500 index. And keep in mind, in this index, there's not 100 companies, right? It's the S&P 500, so there's 500 companies. So there's 490 other companies in this index, right? But 10 companies, the top 10 companies, make up over 25% of the index and 25% of the weight. So really, when you have those big dogs doing well, then they have a lot of influence over the index price, and they're the ones that are going to continue to push the price up. My other reasoning or my other thinking on why the stock market continues to go up is simply because the government and the Fed will not allow the economy to crash, or they will not allow the stock market to go down. At the end of the day, you cannot fight the Fed. You can't fight a pretty much government-backed establishment that has an unlimited amount of money. The Fed is doing everything in their power right now to keep the economy good and the stock market going up. The government is pretty much just telling the Fed right now to print money with these new stimulus packages that are coming into place and stimulus checks. Companies that need a bailout are getting a bailout. A lot of debt is being issued to keep these companies at very low interest rates. Keep in mind as well, getting issued out to keep these companies afloat. It's pretty much a socialist economy right now. No company is allowed to fail. Everyone's getting a bailout. If you start a business right, you're starting it to make money, but the very risk is that you could also lose all of that money. You know, if your business doesn't do well, you've invested all this time and money into it and you could very well lose that. But the government is stepping in and the Fed's stepping in and pretty much just saying, you know, yeah, no, you can't lose money. You win either way. Here you go. Here's some free money. And that's worrying, and that's going to potentially have some long-term bad implications, but I'm not going to get into that into this video here. We just know that that is what is keeping the economy and the stock market afloat, and it could be why the stock market just continues to go up, because they just think, yep, the government's going to rescue us no matter what. If we have a look at the Fed's balance sheet here, it's ridiculous. Such a massive spike in such a short period of time, and it's now up above $7 trillion. The Fed is just printing money right now. So guys, that's pretty much why I think the stock market is continuing to go up. I don't know if it's going to continue to go up. It very well could. It very well could crash. We don't know. We don't know how long this recent upsurge or this comeback is going to last. I think maybe when we see Q2 numbers, and if Q2 numbers are very terrible, then we could see a stock market crash, because maybe we would see investors saying, hold on, the government isn't able to rescue us out of this one. Hold on, maybe this issue is going to take longer to get out of than what we thought. Because it's like right now, the stock market is just priced in that everything is going to go towards perfection and everything's going to get back to normal. And I honestly don't think it will. The ripple effects that this is going to have throughout the economy are not yet fully seen, I believe. We have to wait and see. But hey, I could very well be wrong. We could see the stock market continue to be at here what it is right now and not really do much over the past few years or so. We could continue to keep seeing it skyrocket higher and higher. I'm just giving my opinion, and I could very well be wrong. As you know, everyone's given their opinion on the stocks, and even world economists are wrong sometimes in regards to this. It's very hard to predict. Either way, I have quite a bit of my wealth invested in the stock market, and also have quite a bit of cash sitting on the sidelines. So if the stock market continues to go up more and more, great. My wealth is going to increase. If the stock market goes down and we have another crash, then also great. I can deploy some of this money that I have sitting on the sideline into the stock market and get stocks and companies at a cheaper price and at a discount. Can score some cheap deals. But that's pretty much the video that I have here for you today, guys. As always, if you enjoyed it, please hit the like button, click the circle here to subscribe, check out the playlist or this video that YouTube's recommending to you if you like. And that's all I have for today. You have a good one.